The number one thing to focus on for your deferred sales trust transaction, part 4. Hey, I'm Brett Swarts, founder of Capital Gains Tax Solutions, where we help you and or your clients escape feeling trapped by capital gains tax on the sale of highly appreciated assets, including cryptocurrency, primary homes, businesses, saving a failed 1031 exchange. Also, you can create and preserve more wealth or help your clients do the same. So I'm excited to finish out this 4-part series, and the goal is to the number one thing to focus on for your deferred sales trust transaction. And we had 4 parts. And if you haven't gone back and seen this series, there was part 1, and that was all about timing and eligibility, right? That was a part of the focus, as well as the motivation and the outcome that you're trying to achieve, motivation for selling, and what you are trying to achieve. Capital gains tax deferral, estate planning, right? Estate tax savings, income tax deferral, timing the real estate market, diversifying, freeing up your time and your energy. That's all about step 1, as well as timing, making sure that we're properly setting this up in time. We have a large enough transaction, right? $1 million net proceeds, $1 million gain. That is part 1. So go there if you haven't seen that. As well, we had part 2, and part 2 is all about getting confidence and clarity on the legal track record, taking the emotion out of it and saying, what is the evidence for this? What are the IRS rulings or IRS audits that have gone on? What is the background? What's the track record? What happens if I get audited? That's all about step 2, having that confidence in the track record, which is batting 1,000 so far over 25 years. Step number 3 was all about investments. That was a previous video. And that was, who do you know, like, and trust? And what kind of investments do you know, like, and trust? Risk tolerances, what investments can be made. Also, we touched on the fees, and we touched on tax flow versus cash flow, and making sure you're understanding the nuances and the value of the deferred sales trust, and how to make it an investment rather than an expense. And this is step number 4, and it's our last one in this series. And it's all about closing the transaction and also the post-close, okay? So you've gone through step 1, 2, and 3. You're like, all right, Brett, I'm all in. Let's actually execute and deliver on the plan. And so we got to close the transaction. So part of that, we have to set up a brand new bank account in the name of the trust, right? And we got to get the wire instructions to escrow or to the M&A attorneys and to whoever the closing attorneys are. And we want to make sure those are very clear, that those are the correct numbers. So we always recommend, we don't just recommend, it's part of the demand, which is that they physically call the bank and clarify over the phone the wire numbers. And so as well, you'll also meet the bank as well beforehand, spend some time with them, get comfortable with them, who we use, and why we use them, and their understanding of the structure. Very important part of the process, okay? And then post-close, what to expect, right? And what to prepare for. Like, what actions do you need to take, and what could you expect from us? So as a reminder, there are a couple roles with the deferred sales trust as well. And part of that role is the trustee, and that's my role, third party, unrelated trustee. Then there's that tax attorney who does the, I call him the brain surgeon, who does the surgery. They're the one who are doing all the legal work, and we're helping you to report it properly with your CPA. And then there's the financial advisor, that's a third party. And all of this kind of form the executive team for the deferred sales trust transaction. And so we each play our role, but what can you expect from each of us? Well, if you get audited, you can talk to the tax attorneys. They're the ones who provide that. If you're looking for a 1099 based upon the interest you received, you get that from our company, Capital Gains Tax Solution. If you're looking for a copy of the tax return for the trust, you don't have to file the tax return on your end. In fact, as a trustee, Capital Gains Tax Solutions, we are the ones getting that prepared with the tax preparer we work with. And then, of course, you can get access to that. But what you'll take is a 1099 INT for the interest you've received. On the first year, you'll also report your sale on an installment sale method, and the tax attorneys will also work with your CPA to clarify that. It's a form you fill out. It's a couple boxes you check. You talk about what you sold it for, what the basis was, and then talk about how or show or report that you haven't received any of the payments. Now, if you've received some payments up front, you'll pay tax on that. Where this is deferring tax, it's not avoiding tax. We're just delaying the outcome or the payout to you, so you can defer the tax. Okay. So what else to expect? Well, you want to get line of sight to the bank, and so we'll have that set up. So where the funds hit the bank account, We'll have it set up where you can see that, right? As well, the next step would be where and how the funds are invested, making sure we're executing. You'll get a copy of an allocation or a first draft allocation, and that allocation will kind of lay out where the funds can be invested with some options, and you will approve or disapprove or ask questions on that. You can even make suggestions or thoughts that you might have, or you might be going into your next business venture. In that scenario, you want to have to set up an LLC, and that LLC and a partnership agreement will be set up with the trust, where up to a large percentage of the funds can go into that LLC with you in partnership, where you own that LLC and you're running that deal, okay, on an active basis. So that's kind of what to expect post-close. Once you get through that first tax return, those 1099s, reviewing it, the banks, the investments, it is a new relationship. We always like to say it's kind of like riding a bike. The first time you're with us, and especially if everything's happening so fast, you're already in a higher emotional state because you're selling your highly appreciated asset. And now you're in a higher emotional state because you're still getting to know us, right? And it doesn't happen overnight. And it's kind of like a marriage, right? You're like, oh my gosh, we're on a couple first dates, and now I'm entrusting my wealth and my exit, right? I'm trying to exit well and exit in a tax-deferred state with these new groups, right? These different roles, these different folks, but we're all working as a team. And I like to say it's actually a good thing that there's multiple groups that are also separate entities necessarily for the DST to work, because we're all kind of like the balance of powers. We're holding each other accountable. We're looking over each other's shoulders, and we're making sure that we are doing a great job for you, the note holder, which is the last role, by the way. You are the note holder. As a reminder, you are lending these funds to the trust, right? It's different than just ownership. You are becoming the lender, right? So you're the secured lender. Nothing moves without your approval, okay? You and everything, unless it's approved by you, investments or fees, it doesn't move, okay? Now, it also doesn't move without my approval as the trustee. Important to understand that as well. It takes that dual approval to make things go, okay? So that is post-close. That is closing the transaction. That is line of sight to the banks and to the investments. We use a lot of groups like TD Ameritrade, Charles Schwab, where you can log on and we feed all of the investments to a feed, kind of like a mint.com, where you can just see where the values are at. So that is it for step 4 in the 4-part series. We are and then ongoing we'll do calls and we'll do reviews of the account and the performance of the trust as well. And then at the end of 10 years, typically our notes are set up at 10 years. You can renew for another 10 years and keep it going. We'll also encourage you right now as well to get with your living trust or living trust attorney or estate planning attorney to get your living trust in place and add the deferred sales trust to that, okay? Because the asset you hold is a promissory note, and then the other asset, you want to make sure you put that asset inside of the living trust, okay? So it's important to get that in order, okay? And so that it passes to your heirs or however you want it to pass in the future, okay? So if you have any questions, please go to capitalgainstaxsolutions.com. But I encourage you more than anything to join our mastermind, join our community where we're talking all things deferred sales trust, cryptocurrency, investment, real estate, and traditional financial investing, where you can get clarity and ask any questions, no bad questions, with past clients, current clients, as well as current strategic alliances and anyone in between, investors who are learning about the Deferred Sales Trust, wanting to use it for themselves and their family. You can register right now for free. It happens every Friday at 10 a.m. Pacific Standard Time, 1 p.m. Eastern Time. And you can register right now at capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com. And that concludes our 4-part series on the number one thing that you should be focusing on. And here's really the goal here. Each stage has a focus, right? And I highly encourage you to focus on each stage as much as you can. Check off that box or get really comfortable with it and move on to the next stage. And if you can do that, I think you can feel really comfortable with the Deferred Sales Trust, and you can close your deal with confidence, okay? So we appreciate you watching these video series, and we encourage you, again, to go to capitalgainstaxsolutions.com if we can help you out. Share this with a friend or family member who owns something that's highly appreciated, so that it's not too late for them to use the Deferred Sales Trust. Thank you so much, and we look forward to connecting with you real soon.